Welcome, everybody, for the March 7th edition of Salt's Unsalted AMA. Shawn, myself, and Kelley are excited to be back. Today, we're going to cover off three core topics we wanted to at least kick off with. First of all, the Salt team was at Denver last week. We'll do a bit of a recap just in terms of some of the highlights and some of the conversations that we kicked off there. Secondly, Shawn and I want to get into and get everybody's questions and input on the latest Bitcoin run. What are you doing with it? What is it causing you to do? What questions do you have? There's a number of different ways and directions we can take that. Excited to dive into that a bit more. And then we'll close with a bit of an update on the Celsius refi, just in terms of the next steps. We've had some communications and engagement with Celsius, and that is all we're excited that's looking to come to a close here over the next several weeks and within the month of March. Be good to give everybody a brief update on that. Shawn, welcome. Good to be back with you today.
Yes, likewise.
The team was at Denver last week. I was excited to be there. It's always a fun sort of event to attend in Denver, in our backyard, if you will. And I know from my perspective, it was exciting to see. I felt like there was an increased number of developers there, which was, I think, great interest in terms of people that are building within the community. There was definitely an increased attendance, which I think, again, is showing a growing interest, and always fun in terms of people coming globally to the event. And then the last thing I noticed is that there was still a tremendous amount of layer two activity in companies. So a lot more, I would say, boosts where people are continuing to not only develop projects, but develop capabilities to help make accessing the smart contracts, the Ethereum network in general, and the compute power easier for companies that want to build applications and extend products and services on the network. Curious what some of your key takeaways were.
Yeah, similar. I think it's always great when you have that many people to send on Denver. Takes over the whole city. It's so spread out and decentral in nature that there's more side events than there are probably main events. But to see how busy the convention was, even with them expanding in two different parts where they're using all the developer area and the main Coliseum area and the main event, and then to also see all the side events that were packed is just crazy. I don't know the number of total people that attended, but it definitely felt like attendance was up. I was surprised to see a lot of old project names that I haven't seen in years that were still fully staffed with booths, and you wouldn't know any different. You'd think they were alive and well and just getting started, but they've been going at it for quite a while. I I was also impressed with some of the layer 2 stuff, specifically the Bitcoin layer 2, and then a couple different projects that were really interoperable, more of the layer 2s from Ethereum to other chains. Thought that was pretty exciting. Um, just feel like you get lost in the sea. There's so many people there that you can't see it all. There's no way. But I definitely feel like the majority of the sentiment I was getting is there was a significant amount of projects getting ready to raise money and a significant amount of VCs getting ready to invest money. All signals leading towards pretty strong sentiment of a full bull market, without any doubt, way more than in previous years.
Yeah, I'd agree with that. I would say there was a larger investor and startup and funding theme, at least within sort of the side events and the evening activities throughout the week, which was great to see that come back in a way that people are excited about both developing and investing in crypto as a whole and crypto as a broader community going into 2024.
Yeah, it didn't feel like the retail FOMO by any stretch. I still feel like we're ahead of that. But I think it was, I don't know, it just felt very indicative of the time where you can see the real work and the real environment spinning up and getting excited prior to what you'd normally see in a bull run. It just feels like it was a little more bullish than I would have expected, even.
Yeah, and still a lot of activity around financial transactions. So really still at the heart of helping people move money, exchange money, think about how to integrate new ways of using or facilitating transactions within even layer web 2 oriented applications, but starting to build more things that are completely unique to web 3, which I think we will exist in this hybrid world for a while, and having that interoperability is going to be key.
Yeah, I'm curious, what were a couple projects, if any, or sectors that stuck out to you of interest?
I think the key one, and I touched on it briefly last week, was really some of the social media about really trying to embed faster transactions and more direct transactions in terms of doing social media in a very different way than how it's done currently on Web 2. I think that trend is exciting, forcing people to say, okay, if we're going to have to exist in social media as we know it, but also participate in Web3 social media, how can we be doing it differently? How can we be experimenting to be providing more direct transactions and allowing people to facilitate payment more globally in an easier way? I'm intrigued by that.
Interesting. Yeah, I didn't see a ton of that, but I did see a bunch of social platforms that were, leaning into the Web3 authentication in the way that you could create networks or social groups based off of indexing of projects, which is pretty fascinating.
Yeah, and I think there was a large presence of a lot of zero knowledge proof companies that were helping to facilitate the ID and verification in different ways within the ecosystem, which I think is great from the global aspect and also the way that starts to scale, especially from a machine to machine or program to program type transaction set of activity and applications.
Yeah, the ZK rollups was definitely a huge theme. I think there was a lot of excitement around all the different applications on all the different chains for that technology.
Now, Sean, you had mentioned earlier, and I know we talked a little bit about it throughout the week about the Bitcoin layer two activities that were in town at the same time, which I think is a great level of indicator of the excitement in the space as a whole, but also in terms of I think the pressure that Ethereum is putting on Bitcoin to expand how it will interact beyond basically the main chain. What were some of your takeaways? 'Cause I didn't make to any of those events. I'd be curious on some of the insights that you took away and other elements that you're excited about.
Yeah, I was definitely most excited about Bitcoin Layer 2 out of all the event, which probably sounds funny being at ETHDenver. But there's been a lot of development recently coming around to drive chains and side chains on Bitcoin outside of ordinals or anything that's always been available. Just recently, people started figuring out how to put data there, more along the lines of actual side chains and some of that development. I've been waiting all along, thinking whenever that comes, that's going to be a big opportunity for Salt to be ahead of the curve on chain lending and on chain products on Bitcoin's main chain. So that was super exciting to me. There was a good amount of projects that were getting ready to ramp up and launch and or had just launched. There was a lot of funding going into that. There's a bunch of VCs that were excited, and it just was shocking to see some of the amount of money that was being pushed into that, which really hasn't been an option on Bitcoin up until now. And I would say still really isn't quite there. There's still a little bit of pre I think people may be getting a little bit ahead of where the technology is on what they're selling. But for example, BIP 300 is a Bitcoin proposal for improvement that's been out for quite a long time. That some of the fundamentals underneath that are finally coming along to where I could see with enough consensus building when that happens, not if, but when something like that happens and full side chains and drive chains are enabled, that it's going to be a lot of the stuff we've seen in Ethereum over the years. I think some of the best is going to then suddenly will be possible to build on top of Bitcoin. So that was definitely where I was most excited. I think there's a big opportunity for Salt specific to that as well.
The sidechain conversations I thought was really interesting. I went to a couple talks and conversations around what that will mean, both in terms of authorizing data from a machine learning and an AI perspective about how chains will be linked, not only in terms of distributed models, but how people can both own and then control data that will go into those services, which is going to be very different from the centralized model that we think about machine learning and data sharing today, which is fascinating to think about. I think we're still a ways off in terms of that being practical, but something that the more the ecosystem can get better at managing sidechain activities will help it scale faster and more effectively.
Yeah, you spurred. Actually, there was one other thing that was pretty interesting. I was able to attend an event specific to decentralized AI, project called Morpheus, and I forget the other elements to it, but the emphasis being how to build knowledge bases in these language models that are not owned, that are fully open sourced and decentralized so that they ride on top of blockchains. That was pretty eye-opening and very interesting. I didn't get enough chance to really do the full deep dive the way I'd like to, but just seeing the creativity around tokenomics from the blockchain side of the world, the way we would think about tokenizing assets and value with block space, and then the tokenization of words from the language model side of things, and how you can see this rapid, I don't know if it's a year behind or something, but there's a very fast follow from anything that these large companies are doing, building language models and AI that's making its way into open source versions of that. That was, and you haven't seen a lot of this. It sounds like a buzzword when you even say it. To think about AI and blockchain, it just sounds like you're totally putting two hype things together. But I think there was actually some there. I think there's a real potential, and so it's something I want to follow a little bit closer to see how that might evolve.
Yeah, I definitely think the AI push and trend was is going to continue to put more pressure on thinking about how real and digital assets are tokenized so that they can be tracked and shared and monetized. Which I think bringing this conversation back to salt a little bit more, we are our ability to lend against and understand how to trade and facilitate wealth management around tokenized assets is key. Our biggest one that we back with our customers and we lend against, we do Ethereum, and we've been doing Ethereum since really the beginning, but obviously is Bitcoin, which is a big driver of the portfolio. And I'm leverage that a little bit to shift into Shawn, right? The price run and the excitement around Bitcoin, not only this year, but especially over the past several weeks. What are some of your key takeaways with the price run and some of the conversations that you've been having? And also want to invite everybody else to come up. We'd love to hear your thoughts and questions around the latest market and what that might mean for you and the questions that you have.
Yeah. So my sentiment was, I was 4 or 6 months ago, I was thinking about how the cycle could be different because every time there's always this question of how are people going to gamify, or where are the opportunities? Where's the smart money trying to go? And what's the new money coming in? What's different in the cycle this time versus last? And I, I came to the conclusion, at least it was a strong opinion, that it would be front running, just like we had an early end to the cycle in 2021 that I think was surprising, that we would have an early start to the cycle here, which has, I think, been totally validated. And that's just like whenever you follow the path of most pain in the market, it's whatever the majority of the people are concerned won't happen or believe will happen. Usually you get a bit of the opposite to happen. And so hitting near all-time highs, although I would say given inflation, we still have a little bit of a leg up to go to hit true all-time highs with the Bitcoin price. For all intents and purposes, we've hit that mark way earlier than I think most people would have assumed if you just used historical data for that Bitcoin halving. I attribute most of that to the ETF and just the amount of new people in the space. There's just a significant amount of new people that have come in to the space in the last couple of years that are maybe not in tune with the history at all. I have a feeling we're going to see a much larger cycle this go around and probably a faster cycle. As far as the end of the cycle, I don't know. I haven't really thought about that as much yet. I think it's going to depend a lot on what the rest of this year looks like for price, specifically what does that actually look like when we get the full impact of retail coming back in, which we have not seen yet. So, previous point, like if you're at ETHDenver, you see just how much development's going on, but I don't think people have really seen what it looks like for Bitcoin specifically when all of these compounding effects really ramp up. And so leading from that into could we see some pullbacks or not? I think overall everything seems significantly bullish. I think that we're probably going to see some choppiness here in the near future, next couple months, but ultimately it's going to be a pretty impressive year for just that metric. I've been more interested in following the power law dynamics and some of the graphs that just show the math of logarithmic action of Bitcoin over time that kind of also paint this picture of the inevitability of higher price points. But it's still just a different landscape. We do have different players in the space than we have had before. I think there's a probability that we see China enter back into the narrative in a way that we haven't seen in a while, that hasn't been priced in. And so I think it's going to be interesting.
Yeah, lots of interesting times ahead. Santiago, welcome back. Thanks for joining us. We'd love to have you ask your question.
Hey guys, how are you? No, I missed the beginning, so I don't know if you guys covered some of this. And I know that I'm pinging you guys on it every single day. To Shawn's point, I think I want to be tone deaf to all of the Celsius borrowers present here that have been just waiting for that transaction, that refinance, that capital event to take place in the back of this really pretty aggressive kind of bull run that we've been going on here post the ETFs, right? And that wall of capital and everything that everyone's tracking. So it's obviously been incredibly bittersweet for me, as I'm sure it has been for the majority of borrowers that are waiting for that refi to play out. I guess so. Along those lines, are there any updates from the debtor on when that might play out?
Yeah, Santiago, first of all, I feel you. I feel like the borrowers have gotten the bittersweet run of this more than anybody. Like just the delay of time while watching this run take off and knowing that there's some impact to the prices is just brutal. And so I hope that we get lucky and get a pullback that's just ideal for timing. The last update we had from the debtor was basically outlining some updates. They just need to verify a bit more on QA, as they call it, but that I still think we're like within days, if not a week. Hunter, what do you think as far as your interpretation of the last update we had?
Yeah, I agree with Shawn, Santiago. We have had initial data being shared from the debtor to Salt and the other refi providers. So everybody now is going through the process of conducting sort of our due diligence against people that have applied for loans. And I am optimistic that the refis will be able to start as soon as sometime next week, that we can start to get the processing done. We're just waiting on the due diligence steps, both on our side as well as in linking up with the debtor in terms of actually how the transactions will be batched and facilitated.
Got it. Okay. I appreciate the insight. Thank you, guys.
Yeah, it felt for a while, it just felt like it could have been the first week of March, but was probably going to be the second. It seems like that is shaping up still to be true. So let's knock on wood, make sure that nothing gets in the way of it now. I can't really imagine any reasons why there would be any more delays, quite frankly. I just don't see where that could be. We're just validating data at this point. So
okay, I appreciate that. And I appreciate all you guys' effort and staying in front of it and everything. I know that as lenders, lending partners, it's really the plan administrator, right? It's not up to you guys. So I appreciate all the championing of borrowers that you guys have been doing. So thank you for that.
Yeah,
Thank you, Santiago.
yeah, we're almost there. It's been exhausting for us for sure because we just want to move, right? There's no value in it being slow for us, but we also can't change what we can't change, so we can only just keep checking where we're at, making sure that we're ready to go, and outside of that,
Yeah,
answering questions.
no, 100%. And I hate to be a pest, but it's just one of those things where I don't know what I don't know. And I'm not privy to a lot of things or that may be going on behind the scenes. And I know at least general rule of life, the squeaky wheel tends to get the oil, although you might end up getting crossed off of certain invites and lists, which I'm perfectly fine with. But anyway, so I appreciate you guys.
Yeah, no, we appreciate you for sure.
Yeah.
Stay squeaky. It's all good.
Thanks, Santiago. And I greatly appreciate it. Excited, but everybody wants to come up. Kelley is helping me maintain order. Let's go to AK first, and then Adrian, you'll be up next. And I'll give a shout out to everybody before we get to you.
Thanks for having me up, guys. I actually came up initially to talk about Bitcoin market, but I am a Celsius creditor, so since it's already melted into that, famous last word, Shawn. I don't know if you guys saw that there was a filing in Stretto on the docket. One of the lone ad hoc members made a filing, not quite demanding, but pleading for effective date prices. And there's a rumor, unconfirmed, but for reliable sources, that a influential member of the UC is delaying things for maybe a similar reason for their own benefit, probably not for the creditor class as a whole, but it just seems like yet another bump in the road that is at least they're going to have to respond to. I don't know if you guys were aware of that or if you had heard
I
anything
have not
about
seen
it.
the actual filing. I'll have to go look that up. I had heard some grumblings from in channels of people thinking about if they should or shouldn't petition for a change in the treatment of price given the circumstances, but I hadn't seen the actual filing, so I'll go dig into that.
Yeah, it was actually in the form of, it first was released because it was a personal correspondence from a member of the UCC, and they leaned into a personal conversation they had with the judge about treating people fairly, and that letter circulated for a little bit, and then it actually went into the docket up on Stretto. I don't know, and I don't know if the fact that there's a UCC member maybe delaying for the same thing could actually, for once, be a help to us to get something like that. But if it doesn't, it's just more bad luck.
I'll definitely check it out. Yeah, I don't have a comment on that yet. Let me dig into it and then
All
formulate
right,
one.
fair enough.
Would love, yeah, hopefully that goes through. Would love to see them favor the borrowers and the debtor or the creditors in that scenario.
That's all I have.
AK, do you want to ask your Bitcoin topic?
Okay. Yeah, I could ask that. I was just gonna say that as far as the early cycle start and the ETF, and then like Shawn said, a lot of people are saying retail isn't in yet. But I was wondering if this time around retail, at least in terms of the newbies, would just manifest itself as the ETF, and there might not
That's
be a
interesting.
full-fledged wave.
I don't think I could get my head around that because so first question I have is who's actually buying the ETF? I don't think it's retail per se, and I don't think it's the existing hardcore crypto enthusiast Bitcoiners. I think they buy spot and or we're already in or buy on Coinbase or places like that. I think it's the silent pressure of buying where you get more of the index kind of approach where there's just a continual flow of money. And I suspect that we haven't fully seen the majority of that for the ETF yet, specifically because it takes time for registered investment advisors and broker dealers and wealth managers alike to really get up to speed and integrate something, they might not even know there is an ETF at the moment for the majority of firms like that. And so I also think measurement anyway, like this has always been true for me. So when I start getting random outreach from people from high school I haven't talked to for a long time, or LinkedIn from people I haven't heard of for a really long time, and getting pitched from Uber drivers along with social media influencers that are currently pitching AI, and suddenly they start pitching crypto again. Like those are all signals that retail's like FOMOing again. And I don't see any of that right now. None. I only see really the enthusiast, and then especially the newer people entering the space that are more enthusiastic. It still just feels a bit early in the cycle, and I just don't see that. Now, of course, that usually doesn't start until you start seeing a real rip FOMO tops, but just getting close to an all-time high before, which to me is very impressive for where we're at. I don't think we're there yet, and I don't think it'll be replaced by that. But is that what you're thinking? Is that potentially could just move over into just the ETF hype?
Just and at least for the angle where people are like, "Oh, hey, y'all, I finally got my dad to buy." It would probably be much easier to get your dad to buy through Fidelity than going through Coinbase or something. And
I see.
but if you think that's not even happening yet, then
I could be, but I'm not seeing that. So
yeah,
like I have my indicators that I always look for, and I'm not seeing any of those yet.
okay, I'll buy that.
Which is in my mind, it's good that there's a bit more humble. Like it feels a little more humble right now than when it starts getting exuberant. You start being embarrassed that people are FOMOing so much. Thankfully, I don't see that right now. I still feel like there's a lot of level heads that are like, yeah, okay, so we hit the old all-time high. Wake me up when there's something noteworthy. I think that's a good sign, but I still think that crazy FOMO is coming too.
Yeah, I would agree. My hunch is, and I've been looking for the data, is that it's some of the institutional money that's looking to get exposure to Bitcoin as the early money coming into the ETFs, which I think is consistent with what you guys are talking about, is that we've yet to see, or there's still potential around retail interest to go up, both within the ETFs, but then more broadly in terms of buying in directly. AK, thank you for your question. Let's move on to Adrian. Adrian, do you want to ask your question?
Just real quick on that conversation, I think another indicator would be all the meme coins and all the dog coins, and how fast they go up, right? Starting to see a lot of that as of now, recently, but not as bad as in the last cycle. So just a side note of
Yeah,
that.
that's true. There's definitely signal there. I think you're right. There has started to be some of the ridiculous meme coins.
Yep.
Not as ridiculous as last cycle yet, but for sure seeing some of that.
For my question, so it's about Celsius. So given that you guys got very limited time to start processing the loans, basically a week or just over a week, I guess, if you got the data this week. Is there do you have any indication that there might be a potential extension of the March 15th deadline to close the loans?
I don't think so. So I mean, we've been staring at the data for a really long time. There are still borrowers who haven't finished their paperwork, and of course, like they're going to have to be. We can only go as fast as somebody's fully complied with what needs to happen. But for everybody that's ahead of it, like there's no reason why it shouldn't be fast as soon as you start moving. I don't think the delays will be because of the lenders. Let's put it that way.
Yeah, and just to add to what Shawn said, regarding the date, there's not a hard and fast date in terms of March 15th in terms of completing the refinancing. The deadline on March 15th is just for any creditor to submit your irrevocable directional letter with Stretto. So we will be working with sort of the debtor and Celsius to process those, and if it goes beyond March 15th, then that is possible. There's flexibility in there. We'll work to get them done as quickly as possible in a batch way, but it is clear that the debtor is operating with sort of a small team, and so we're trying to understand and structure things to move as quickly and efficiently as possible, but there may be some that extend beyond that date.
Okay, understood. Yeah, I think I had read that that day was the deadline to close on the loan, but may have been mistaken. Okay, no, thanks for that. Appreciate it.
No, that'd be great, Adrian. Thank you for coming up. Jay Hodson, you're next. Would love to have you come up and ask your question.
Hey, everybody. Thanks for taking
Welcome.
my question. Yeah, I was actually in a one-on-one with Nathan from your company yesterday. I just wanted to touch base with him, make sure all my paperwork. I'm a Celsius Refi client, and just want to make sure all my paperwork was in line, which it is, which I'm glad to say. So really, I'm in California, and I know that you all are waiting for that license. And he also mentioned something about maybe a plan B or something like that. Can you all speak to that?
Sure. Yeah. So we are just patiently. Let me just say, if there's anything that's been more grueling and long than the Celsius process, it's dealing with the state of California. But we've continued to work towards just the best possible approach for how to prioritize everybody specifically in the Celsius refinances with what we're speaking about. We've had a lot of emails just recently this week going back and forth. And so I have some context and update. I have another 2-hour meeting later today on the topic. So one, we have a plan A, which would be best for us, which we think is best for all of our customers. But we're also aggressively looking at a couple other plan B opportunities in the event we just want to have belts and suspenders or backup plans, contingencies in place. We're still convinced that there's more than enough reasons why we'll be able to resolve these. Of course, we can't start refinancing anything until we get to where Celsius is ready, but it's probably be a binary. At one point, we'll just be announcing, and this will be in the past. Up until then, we're somewhat sounding nebulous, and whenever we talk about it, because we don't want to overstate or understate, but it's definitely the top priority, without any doubt.
Okay, cool. Thanks, Shawn. Yeah, I definitely am hoping for plan A, and I appreciate you guys working on a backup plan because I think that benefits everyone. Just as a side note, it blows my mind that how those Celsius borrowers got into the situation. Celsius was sounding similar years ago when they were trying to get their license in California, and it was like delay. BlockFi had their license, and I had actually taken a loan with BlockFi, and then I closed that loan to take some out with Celsius when they finally got their license. But it's just really disappointing all the lockdowns that happened after everything in California is I can imagine it's terrible to deal with those folks, but hopefully they will bless it and we'll get back on the ball. But thanks, guys. I'm looking forward to it.
Yeah, thanks for staying patient. We got to be close now.
Yeah, and I appreciate staying in touch with Nathan is the right path. And if anybody has any questions, feel free to email sales@saltlending.com, and they'll be happy to help you address any specific questions and just make sure all your paperwork is in order. Kelley, who's next up on the questions? Just wanted to sync up.
Yeah, no worries. It was CF, but they dropped off, so now it's Funkmeister. Welcome to the stage.
Excellent. Thank you for coming up, Funkmeister.
Hello, everyone. Can you hear me?
Yeah, we can. Welcome.
Fantastic. First of all, thank you for your time and for your effort on all this. It's not easy time, not for you either. We're all grasping for straws, and I think everyone wants to ask the same question, but we also, of course, also have to be diplomatic about it. Do you have a feeling, because you mentioned before, they're taking their time because they had to check some things and evaluate some things. Do you really feel that it's a technical thing and it's not more let's call it an excuse just to drag it longer?
For Celsius?
Yeah.
I think it's a small team dealing with a continual, there's always some new filing or something that somebody has to deal with. Feels like there's always something that they have to consider. I don't think it's a stall tactic or anything like that. I think it's a logistic issue from what I can see.
Mm-hmm. Yeah, because if you are, of course, member of the Celsius Loan Telegram group, and of course, everyone is arms up in the air and everyone is having a theory, of course, including myself, on why they're waiting so long, because we are really getting hammered, to say it quite frankly, on this one. And it wasn't quite what the deal was back then when we signed the agreement. On the other side, what I would suggest to you, if I can, I know Justin is very active on the channel as well. I'm talking about the Celsius Loan Telegram channel. Many people are still in doubt how to calculate. Should I do a set-off? Should I do a refinance? Many people have, for instance, have applied for refinancing, but are now doubting if they should go ahead with it or not, or they should cancel it. And I think we on the channel are trying to help them, but I think you could also help them to make a wise decision on whether to continue with the refi option or not.
Sure. Yeah, I haven't had the time to be as active in that channel as I'd like to, given just the amount of time I have in the day. But I'm also, maybe it'd be good to hear, like, why I can't quite wrap my head around why somebody would want to cancel or net off in any event. What's the counter to that? What are the two sides of the argument?
Yeah, I think what people get wrong is that they see the prices going up and up and up, and they just see they get less and less coins back, whether it's BTC or ETH, and they just feel that the less they get back, the higher the risk is of liquidation because of the LTV. And I think they get cold feet because they don't understand the calculation, and then they just back out, or they want to back out.
I see.
As well as not understanding what Salt has with the stabilization. They think a liquidation would mean they are just erased, wiped out completely.
And also, sorry, but also keep in mind when I use the word wrecked or hammered, some people are really wrecked. They don't have a dime left. And they know if I refinance and suddenly there will be like a pullback like we had, that was yesterday or the day before, 10% or was it 15%, whatever, they will get liquidated because they don't have the spare change to come in and say, okay, I put some extra coins in, I put some extra US dollar in. They just don't have it. So they say, okay, before I lose everything, I'll just stick to my 5% or 10% or whatever it is, 15% of the original, instead of, let's call it gambling or betting on getting maybe back 20% or 25%.
So it's completely centered on the fear of liquidation as the primary driver.
Yeah, that is my understanding. And that's why I say it's a very active channel and people are all over the place. But it's my feeling, especially many people, they don't express themselves. I think there's 1,800 members, but it's always the same 40, 50, 60 talking. So I guess there are many out there that could maybe need guidance. That's just my feeling.
Yeah.
And finally, and then I'll leave you, when the refinancing happens, what is the physical process? Because you can't refinance all at once. So is there any way that you have influence on the timing? Because it's different. It's a different thing to refinance late on a Sunday afternoon than it is on a Wednesday morning. If you look at the price chart, there can be 3, 4, 5% differences. Is that something that you have any influence on?
So I suppose, let me just talk through the mechanics. The way to be fair and equitable, so we're treating first come, first serve of people that filled out all their paperwork and are ready to go, especially ones that have low LTVs that are easy and prepared. And so there's a bit of a logic that we've put together for a first in approach for smaller loans first in size with larger LTVs, meaning healthy. And the way we were thinking about this is just, we're always thinking about how to mitigate risk. And so there's a few different methods and ways that you could say that our logic is based off of being as safe as possible. But there's only so much really we can do inside of that. But what we determined was that if you cleared the smaller loan sizes first, one, we could probably do more in batches in a day. So we'll be able to service more people in one day at a time. That's some of the logic on that. And then two, the safer LTVs, so that it buys more time for anybody that may be on the riskier side of it at the end to give more consideration to. And because there's not a deadline of when these have to be done, there's no forced deadline that we're aware of yet. I think there's some flexibility to just treat this from a case-by-case basis and be as risk-averse as possible for the best benefit of everybody. That's that's what we have the ability to control, is to work one-to-one with each borrower to make sure that the timing is right.
All right. That sounds good. Sounds like a very healthy approach. That's it. Again, thank you very much for your time and for your effort.
Yeah, thank you. I will make some time to get over there and see if I can add some value when I can to that channel. We do have other ideas and things that we've been thinking about ways that we can help avoid any kind of liquidation risk. There's a lot of different ways you can approach that. And so maybe it'd be a good time that we could share some of those and get some crowd consensus or whatnot. So I appreciate you flagging the concern.
All right, sounds good. And also, if you want to reach out directly to one of us, one of the known names, so to say, to use us as a promoter of new solutions, feel free to.
Sounds good. Yeah, thank you.
Okay.
Yeah, thank you for coming up. And just as a reminder to everybody, Salt has prepared a calculator to address some of the points that Funkmeister has brought up. If you send an email to sales@saltlending.com, the team will send you a copy of it. And not only does it give you an indication of what your loan would look like and help provide some data in terms of what might be the best scenario for you, it also gives you some options in terms of the repayment options that a loan would provide, both in terms of interest only as well as a financed interest and or principal and interest, so that you can craft a refinancing solution that would be most suitable for your individual scenario. But Funkmeister, thank you for coming up, and thank you everybody for your questions. Shawn, I'm just to highlight a couple of the things, given that we're on the Celsius topic, that have come up. I think we have had questions over the past couple of weeks. There's been, I think, some of the other refi providers have had some announcements around personal versus business loans. Want to just confirm to everybody that SALT does provide both personal and business loans across a wide range of jurisdictions. So if you have any questions and are looking for a personal refi, then please let us know. If you go into SALT Lending, make a loan request or an actual loan application, we'd be happy to work with you. And the other piece of information that's come up is questions around our ability to lend against Ethereum. And Shawn, you can talk to this one. We've been doing that really since sort of day one and we're not new at lending against Bitcoin or Ethereum, have been doing it for a while. And so I know some of the refi partners are brand new and have acknowledged that they're brand new in the space. So if people have questions regarding how we do that or what we do, please again reach out to either support or sales at saltlending.com. John, I'm curious, just to give everybody here a little bit of context. When the company started, what were some of the first currencies that Salt did start to lend against, and what was some of that experience that we've learned from in the early days?
Well, when we started, it was just Bitcoin. Ethereum was nowhere near stable. In fact, when we first started, we were building all the multi-sig contracts and smart contracts lending on Bitcoin directly. And I was way too early because I had the thesis that we had NFTs and colored coins and a bunch of other stuff that was happening on Bitcoin back in the day before the scaling debates and all that. And so I was a total maxi at the beginning and was wanting to build on Bitcoin exclusively. And then as Ethereum really started to show up and have the contracting layer, and as Bitcoin started to slow down and choose to battle out with the big blocks versus small blocks and all of that, they really didn't provide an option to do just on Bitcoin from the contractual layer. And as I was talking about at the beginning of this show, it's why I'm so excited about some of the developments on side chains and drive chains, and why I'm a proponent of BIP 300 and some of the Bit VM and some of the other work that's starting to show up on Bitcoin directly, is that I think eventually it comes full circle. It's just going to take a long time to do it without any risk to the chain on Bitcoin. But it was all Bitcoin at the beginning, and then as the market cap would grow, we felt, well, we should extend this to other currencies, because we'd always get people asking, and we still do. Like, we still have people asking, hey, can you support this or can you support that? And we probably could support more than we do from collateral. We're just really careful, because anytime we've onboarded a new asset in the past, it's ended up being like a little bit disappointing in the total amount of people that will actually show up and borrow against it. So you might have people say there's a huge community for X token, and then by the time you end up going through the process of onboarding it the proper way, you end up only getting a fraction of what you thought you would. So we just look at where the demand is a bit more, and we focus on what the total liquidity is and the total market size. And it tends to continue to be just Bitcoin is 95% of everything, which doesn't mean we're against other coins so much as that they just have to make sense. There's got to be a real use case and enough demand there. So that some of the lessons we learned was there's a huge, I think, value in a portfolio approach, especially if you believe the thesis that the world's assets will continue to become digitized, and that there's a lot of value in being able to manage digital assets in a portfolio, which I believe is true, although we're still early. That approach to being able to blend the two works really well, for example, with the Celsius loans that are going to get back Bitcoin and Ethereum, because we're well suited to deal with that and have a blended portfolio view of that. As far as new assets, though, we've just learned that until there's more than enough proof and critical demand, that it doesn't really make sense to veer outside of what is where the market is at, which right now is for sure Bitcoin and then up and coming Ethereum.
Yeah, Shawn, I think the portfolio approach is one of the things that I know the team gets lots of compliments on, and customers are really pleased with, about being able to de-risk some of the volatility of margin calls or the potential margin calls with adding different assets into collateral mix, which actually brings us on to a fun piece of news that we are now able to support USDT. So exciting expansion to the collateral that can be used to back up your loan. And the team has more information. Kelley's let me know there's information that's queued up and ready to go out later this week with that announcement and more details on it. Building off of that, we've got Jackie. Thank you for coming up. Would love to have you ask your question. Jackie, you there?
Yes, can you hear me?
Oh,
yeah,
you're faint.
Your audio is real faint.
Yeah, there's an echo as well, Jackie.
Oh, I'm not sure what to do.
Probably try to step down and we'll bring you back up. Sometimes that'll fix it.
Okay.
I think we should bring somebody else up and then we'll come back when Jackie's audio is fixed.
Kelley, do we have anybody else in queue?
No, there's no one else right now.
So, Shawn, on the portfolio approach to collateral, when did that come about in terms of the development from the company? As I was mentioning, it is a very sought after and recognized or valued feature of Salt in terms of being able to back up a loan with multiple types of collateral. Was there a particular scenario or use case that really drove that, or was that in the original design of the offering?
It was in the original concepts, but I don't think we actually rolled it out until 2020. And really, you just have a decision point that you have to make a hard stance on when you're talking about the technology. Either you are doing a one-to-one loan per asset only, and then you end up with a lot more loans to manage, which we decided was not as ideal, right? We can service that, but it's better from our opinion on this is that there's more demand for people that have multiple assets that want to blend out the volatility with the loan with multiple collateral types versus having to manage more loans and more margin calls and more details per loan, per asset. So that was really the thesis that drove that. And for example, you can add stablecoins to your portfolio so that you're blending some of the volatility out and making it easier for making payments. Whereas if you had 3 different assets and you wanted to have 3 different loans, that would not be possible. So I think it's just a bigger benefit to the users. And we tested that out quite a bit. And that was the feedback that we got back as well.
Yeah, no, I think that's great. Jackie, let's give another go on your question. All right. While we wait on Jackie, Sir Daniel, thank you for coming up. Why don't you ask your question?
Hello, this may be out of your purview, but do you have any suggestions on Celsius tax losses, how to handle that?
way out of my purview. I can't give tax advice for a bunch of reasons, but maybe elaborate. Can you be specific on it just to get the context out in front of the group?
There's a bunch of people talking about it on YouTube right now that obviously if you had losses on Celsius, it's somewhat complicated to calculate how the losses work. And there's several different ways to calculate the losses and so on. And I'm just trying to figure out who I should be consulting with, that kind of thing.
Yeah, I've seen some pretty interesting stuff on Twitter as well with people. What I do know is that everybody's in a different jurisdiction and ultimately has to get their own opinion with their own CPA. The standard disclaimer there, no
Right.
tax advice, and at the end of the day, you have to figure out what your CPA will stand behind and what makes sense. And everybody's situations are completely different, which is why I don't think there's any one size fits all. I think I don't have any advice. I would say there are people that are really smart, especially in some of these groups that have been thinking about this a lot, that could probably lend more feedback to that. I don't know if anybody in the group here wants to come up and point this gentleman in the direction that they think works well. But yeah, it's probably out of our purview.
But it does seem like a good idea to do the refinance in terms of taxes. Wouldn't you agree?
For what I can say is that for our product in general, when you borrow money, what you are doing is you are buying time, right? You are paying some cost to dip into future capital and or avoid some circumstance. So you're paying for the flexibility of more time as a principal. And where that becomes very beneficial to a lot of users is when they're planning their finance. So when people want to be ahead of understanding how to plan their finance, the flexibility of having more time helps. So for example, somebody may have the intention of selling off some assets to pay taxes at a certain point in time, but that certain point in time is not today. And so they'll borrow against their asset to get some of that cash they need now so that they can strategically time when they want to sell the asset later. And so that's true with these refinances as well. And without giving tax advice, which I'm not qualified to do, for the context, those are what a lot of people will use the product for. And that's true in any asset class with any type of lending product.
Sounds good. Thank you.
Yeah, in short, right, it's the ability to choose when you want to sell your asset rather than being forced into an unplanned selling of your asset.
So Daniel, thank you for coming up and asking your question.
Appreciate it. I hope these guys, Celsius gets going soon.
We're close. I feel like we have to be close. It really does. Let's just knock on wood.
So Shawn, we're coming up to the top of the hour. First of all, greatly appreciate everybody for being here and coming up and asking your questions. Any closing thoughts from you before we wrap it up?
No, there's a group here. So if anybody wants to jump up and talk about anything crypto related, Bitcoin related, pricing related, Celsius related, I'm okay staying on a few more. We usually just let these fizzle out as soon as we've chatted about everything we wanted to, or there's no more questions. As long as there's some good content and questions that people want to stick around for, I'm happy to go a bit further. And when everybody's done chatting, we'll end it. Looks like Jackie's back too. We'll see if he's got the ability to chat now too.
Okay. Does it sound better?
Much better.
Yes.
Okay, great. All right. I have a couple salt questions and then a Celsius question. On the salt, what is the utility of your salt token?
It's basically a discount, so you can apply it towards your interest payments, and you can use a limited amount of it towards collateral.
Okay. I received some emails from you this week about how you're offering 12% on, I believe, stable coins.
Yeah, dollars are dollar equivalents in stable coins. So on the lending side of the equation, we're ramping out new additions to the way we allow lenders to participate on the platform, and that offer is specific to lending capital. So people that want to fund your loan, let's say we have a borrower that wants to take out a loan against their Bitcoin, and we have a lender that wants to lend capital that's comfortable with the collateral of Bitcoin. That's the match, and the rates are subject to to what the demand cycle is. So we're always refinancing and paying off a previous lender. So there's always a use of capital. The rates will vary depending on supply and demand. Right now, there's a significant amount of supply that we want to ramp up to, and ultimately, we want to lower the cost of capital, meaning we want to be able to give loans at the most competitive rates possible, which means we need to bring on the maximum amount of dollars which are always designed to lower whatever the current cost of capital is. And for that offer, that's only for accredited investors and jurisdictions where we're operating and feel comfortable with. So it's still case by case basis and for accredited investors only, but it's an extension of what we currently offer to institutions. So if we're borrowing dollars from institutions, it's similar in that we're only going to borrow the money if we can get a cheaper cost from what we're currently paying. And the capital is always going to be used for the purpose of lending to borrowers at cheaper rates.
Okay. Good explanation. So I'm from California again, and can you speak to your plan B?
Yeah, so right now, just based on the way things are, we can't do anything with California for any purpose, right? So just throw as many disclaimers as you can out there. Then we wish we were able to, and we hope to be very soon, full-fledged operating in California, because we are not at the moment that, we don't have any products or services for California. Plan B is we have a couple. We have Plan B and Plan C, but they all relate to partnerships and agreements with other lenders that are active in California to be able to facilitate through the regulatory licensed regime that California has in place, the ability to service the customers. That's in a nutshell. Multiple varieties of ways to service this through contingency plans.
Okay. And now I'm clear on it's not March 15th is just the day that I need to designate, right? Whether it's SALT or whoever I'm going with.
Yeah, there's a process that has to be completed regardless with the irrevocable letter and designation. Post that, if you needed to change lenders or if you needed to pay it off yourself or if you needed to net out, we're pretty sure that all of those are still an option. The main emphasis from the debtor is to make sure that you're clear with them that if they send your asset somewhere, that it was completely known to you where those assets are going, and it's really an event that they can share their information, that they can share your information with the said lenders, and B, that there's no risk to them of you saying, hey, I didn't know that you were going to do this. So it's a CYA for the debtor to make sure that you're fully aware of what the situation is for the loans that are being refinanced or paid off. And then after that, there's some flexibility as nobody knows how long it'll take to get through all the different edge cases.
Since I'm in California and I'm not sure whether you're going to be able to refinance my loan, my plan B was to go with Figure, as I understand they work in California. In filling out my Celsius Stretto paperwork, I checked off SALT and Figure for a plan B, and so I'm not sure still what approach to take here.
I think you took the right approach. None of these have started yet. When they do, let's hope there's clarity. But if in the event that we're not there for you and our plan B isn't in place for you, you've done what I think, if I were you, I think you did the right thing.
Okay. All right. So we just keep waiting. Hypothetically, what if we still would have had time? What was your plan if Celsius would have, saying 2 or 3 weeks ago, had said, okay, the loans are ready to go through? Would you have just told California people, sorry, can't help you, or try to push it into a plan B or C? What would have happened in that situation?
In the hypothetical situation, we would have just opted most likely to push for one of our plan Bs. Everybody's in a waiting pattern at the moment, unfortunately. Fortunately or unfortunately, we'll see. Yeah, we'll see. At this point, it is what it is on the things that are outside of our control, which is, I'm sure, true of you as well, where there are things that are outside of your control. And so we have to somewhat just wait until everything's in order, which I know is very frustrating, but there's also, I don't think, any way around that paradigm at the moment.
All right. We'll keep waiting. Thank you.
Yeah, thank you.
Yeah, Jackie, thank you for coming up. So, Shawn, I think we'll call that a wrap. Kelley, do we have anybody else waiting for questions?
No, no one else at this time.
Oh, great. I will remind everybody, if you do have any questions, please reach out to us at sales@saltlending.com or at support@saltlending.com. If you're interested in getting more information about the Lend product, which was here, where we are providing rates of 12 to 8 APY on USDC, USDT, or US dollar deposits for accredited investors, you can learn more at saltlending.com/lend. And until next week, we'll be back, same date, same time. Stay long, stay liquid, stay salty. Thanks, everybody.